The U.S. economy is hurting. President Trump's tariffs are a major reason why. These tariffs are taxes on goods imported from other countries. They were supposed to protect American jobs. Instead, they're raising prices and hurting businesses. Consumers are feeling the pinch. The stock market is jittery. The trade war is creating uncertainty and fear. Many economists warned about this. They predicted that tariffs would backfire. They argued that tariffs would harm American consumers and businesses. It seems they were right. The tariffs are hurting the very people they were supposed to help. The situation is complex. There are many factors at play, but one thing is clear: the tariffs are having a negative impact on the U.S. economy. The question now is, how bad will it get? The economic data paints a worrying picture. The U.S. economy contracted in the first quarter of 2025. This is the first decline in 3 years. Inflation is also a concern. It's currently running at 2.4%, exceeding the Federal Reserve's 2% target. This means that prices are rising faster than wages. People are losing purchasing power. The labor market is a mixed bag. The unemployment rate remains low at 4.2%. However, job growth has slowed. In April, only 177,000 jobs were added. This is below expectations. Some economists worry that the trade war could lead to job losses, especially in manufacturing and agriculture. The stock market is reflecting the uncertainty. The S&P 500 is nearing bear market territory. This means it has fallen 20% from its recent high. Investors are nervous. They're pulling money out of the market. This is further slowing economic growth. The Federal Reserve is the central bank of the United States. It has a dual mandate to maintain price stability and full employment. The Fed is facing a difficult challenge. The tariffs are putting upward pressure on inflation, but the slowing economy suggests that interest rate hikes could make things worse. So far, the Fed has kept interest rates steady. It has held rates at 4.25 to 4.5% for 3 consecutive meetings. The Fed is closely watching the economic data. It wants to see how the tariffs are playing out before making any major moves. The Fed is also facing pressure from President Trump. Trump has repeatedly criticized the Fed for not cutting interest rates. He believes that lower rates would boost the economy. However, the Fed is an independent institution. It is not supposed to be swayed by political pressure. Section 4. Trump's Playbook, Politics, and the Fed. President Trump has a history of putting pressure on the Federal Reserve. He has repeatedly called on the Fed to cut interest rates. He has even gone so far as to call the Fed crazy and my biggest threat. This is highly unusual behavior for a U.S. president. It undermines the Fed's independence. Trump's attacks on the Fed are part of a broader pattern. He has consistently sought to undermine institutions that he sees as a threat to his power. He has attacked the media, the judiciary, and the intelligence community. His attacks on the Fed are just the latest example of this dangerous trend. The Fed is trying to stay above the political fray. It has repeatedly stressed that it makes decisions based on economic data, not political considerations. However, Trump's attacks are making it harder for the Fed to do its job. They are creating uncertainty and volatility in the markets. Section 5. The Crystal Ball. What will the Fed do? The big question is, what will the Fed do next? Will it cut interest rates to try to stimulate the economy, or will it hold steady and risk further economic slowdown? The Fed is in a tough spot. There is no easy answer. Some economists believe that the Fed should cut rates sooner rather than later. They argue that the tariffs are already having a negative impact on the economy. They worry that waiting too long to cut rates could lead to a recession. Other economists believe that the Fed should wait and see how the situation develops. They argue that the economy is still relatively strong. They worry that cutting rates too soon could lead to inflation. The Fed is likely to remain cautious. It will want to see more data before making any major decisions. However, if the economy continues to weaken, the Fed may be forced to act. Section 6. The road ahead. Uncertainty looms. The U.S. economy is at a crossroads. The tariffs are weighing on growth. Inflation is a concern. The labor market is showing signs of weakness. The Fed is under pressure to act, but it is unclear what the right course of action is. The coming months will be crucial. If the tariffs remain in place, the economy is likely to continue to slow. This could lead to job losses and a decline in living standards. The Fed may be forced to cut interest rates to try to prevent a recession. However, there is also a chance that the economy could prove more resilient than expected. The labor market remains strong, consumer spending is still growing. If the trade war is resolved quickly, the economy could rebound. The road ahead is uncertain. The only thing that is certain is that the coming months will be crucial for the US economy.